Welcome back. Well, we have been focusing on the large cap names, but from the mid cap universe, Newgen Software, that stock is surging in trade after reporting a very, very good set of numbers in the first quarter. In fact, the company is up nearly around 100% in the last 1 year. Their revenue surged close to around 34%. Margins also expanded. The company has been relatively unaffected by the US banking crisis, as more than 60% of their revenues coming from India, as well as Europe and Middle East and Africa. To discuss more about the past quarter and to find out what's the way ahead, we're joined by Mr. Virendra Jeet, the CEO of the company. Hi, Mr. Jeet. Good morning. Thanks so much for joining in. Well, congratulations on a super showing in the past year, in the past quarter, that is quarter one. You've grown by more than 30%. Now, normally you say that you've grown by close to around 20% on a year-to-year basis. Can you do better this year? Can you grow by more than 25% that you grew in FY23?
Good morning, Nigel, and thank you for having me on the show. You're absolutely right. I think this quarter has been pretty strong, and it has been strong on accounts of all markets performing. We had a strong growth in markets like India, Middle East. In fact, even the US was strong for us this quarter. This was predominantly on account of, one is the broad-based growth, and the second is, the license revenue this quarter was very strong. As you know, the business is a bit seasonal, and the Q1 is generally lean on licenses, but this time we had very strong license show. So it has strong performance of roughly around 30% growth. Traditionally we have grown at 20%. You're absolutely right, and I think we have been over years trying to push this growth rate because the addressable market for us is quite wide. And with our foray and investments in mature markets, we are trying to push that growth rate. We are keen to push that high. How high that's going to be right now and this year is still too early. But I do think that we can do a strong Q2 as well, and then Q3, Q4 we'll have to look at how the market unfolds. But absolutely right. We want to push the growth rates much higher than 20%, which is our traditional growth rate.
Okay, so when you say push the growth rate much higher, is it possible to beat that 25% growth rate that you've seen in one of the earlier years? I mean, do you think that is a possibility in either FY24 or 25?
So I think what we have done last year, we did around 24% growth. And I think we were, in our planning, we were thinking that we should be able to meet the growth rates what we did last year. But, it's too early and we cannot predict it because, a lot of, what's happens, since the bases are very small, when you break the revenue on quarter basis, few deals can make a lot of differences. So we should be cautious not to take them trends of, the whole year. We will be having a strong year, but how strong, I think we'll have to wait and see how the Q3.
Sure. The reason I ask is because earlier you had said that you're aggressively looking at some opportunities both on the organic and on the inorganic side. Do you think there's something that could fructify on the inorganic side in this year, in the next 12 to 18 months, which could help you with that growth target?
So 12 to 18 months, it's quite possible. Right now, we don't have anything on the table to consider very seriously, but we are actively pursuing this. And the idea is to accelerate the mature market penetration for that. And those are the territories where we're looking at some inorganic. But I think we're more excited also on the organic front. The digital lending is doing very well. Our new products in trade are really making good inroads. India ecosystem of banking, our existing accounts are really growing in terms of, the growth in credit and the lending initiatives is done by all these banks. So, I think our traditional businesses are very strong, but to increase the penetration of mature markets and to speed up our go-to-market out there, that's where the inorganic may help. And we are looking at opportunities out there.
Okay, all right. Looking for some concrete numbers, Mr. Jeet. Your DSO days, that's gone up to 126. On a year-on-year basis, It compares with early hundreds. Could you tell us what's the trajectory from year on? What's the number we should look at? And also margins. The last time you joined us, you told us you're looking at around 22%. Do you want to up that a little bit?
So on the DSO front, what is happening, on a historical trend, we have a lot of revenue billing has happened in Q4 last year and Q1 this year, which has been substantially much larger than the revenue which we have accumulated. So there is some amount of provisioning done even for 90 days. So that's what has pushed. But as I told you, I think long term, in next 1 to 1.5 years, we should bring it around 100 days on average. That's our goal. On the margin front, what we have said that we should be able to do around 21% of EBITDA, and I think somewhere around between 17-18% of PAT. Now it completely depends on how larger the top line we hit because the costs are pretty linear. But having said that, there is also a need to invest for growth. And I think our whole purpose of, the organization is to make it a very large software company and have established our brand as one of the leaders in products across the world. So we are aggressively looking at opportunities of investing in our R&D, expanding our sales and marketing costs. So, but yes, giving overall our broad goals is to maintain a EBITDA and PAT in the ranges we have controlled. But you're absolutely right. In some years, if the top line grows, but the costs cannot go in the same year at the same level. So there will be some amount of organic expansion of margins.
Just very quickly, if you can tell us, the subscription revenues contributes over 30% to your business. Do you plan to take that higher?
So on an annual basis, our what you call annuity and subscriptions have now annuity revenues have gone up to almost 55, 56. Of course, Q1 they will look much larger because of the overall quarter is smaller. As we are selling more and more software licenses, the nature of business is that the annuity keeps on getting compounded. So our aim is that in next 2-3 years, our subscription should reach around 70-75% of the business. And in that, annuity should reach around 40% of our business. So that's what our focus of business and sales is.
All right, we'll leave it at that. Thanks a lot for joining in. Appreciate your thoughts. That's Newgen Software. Let's